After 7 straight months of rising inflation numbers, the consumer price index for April actually went down, but only by a little bit. Year-over-year inflation dropped 0.2% from March to 8.3%. That's not enough to stop planned interest rates by the Federal Reserve at future meetings. How do you figure in these numbers when making financial planning calculations, Brian?
Well, if we use the real inflation numbers right now, not too many people will be retiring, honestly.
Yeah, right.
Just because it's pretty high. There's a company called shadowstats.com, and this is not a promotion or an advertisement of any kind. We do not endorse them. We don't get any compensation from them. But I do want you to know that the company tracks real numbers that the government is unfortunately, let's just say, manipulating a little bit. Yeah. And so they have if you go to their website, you can actually go down and click on inflation. And what it does, it shows official CPI, and it shows what the way that the government used to track inflation in the 80s and the way that they used to track it in the 90s compared to now. Okay. And the reason that's important, they have taken out important things like rent and food and gas, out of the new numbers.
Oh.
Yeah, those things aren't important.
Yeah.
I mean, who uses those in real world?
That's
right?
sarcasm, by the way.
Right,
They're very important.
Yeah, I'm sorry. Yeah. So, but if you look at what it is, the way they used to calculate it, it is currently, that's through 2022. I don't know if this chart is it's through April 2022. Okay, so it's updated. It looks like on his chart, I'm just going to go and guess, it looks like it's almost at 17%. So the way our government...
Hang on, the real or the manipulated?
This is the real...
Okay.
So the way our government used to calculate inflation, which was more accurate. They actually were more honest, right? And let's just take this back. We have so many people coming. I remember I was getting 12% in a CD, and I had a mortgage at 12%, right? They had those crazy inflation numbers. Well, that was because inflation was at 15%. And the government came in and slowed the economy down by raising interest rates.
My dad blames Jimmy Carter.
Okay, well, you can. Blame a lot of people. It's not just one guy, right? Yeah. But it was 15%. Well, we're higher than the 80s. And the government's telling us, well, it went down this month, and it's only 8%. Yeah. What are you talking about? Yeah, it's actually, so this chart's really interesting. If you go there and click.
I think people are smarter than that. I think they see through it.
They are. The people I talk to are like, yeah, no, I see it. All I do is, look at what I paid for something last year.
Yeah.
It's almost 17% currently. And the scary thing was, you look at this chart, and you go back to, it looks like about 2021. It dropped down. It was actually right around COVID, actually. It kind of dipped there. Looks about 7 or 8, 7.5. So it's all more than doubled in a couple years.
Yeah.
So that's scary because it looks like, everything's going straight up. The stock market's going down. And that's kind of what the government wanted. They wanted asset prices to go up. And where that usually lands is real estate, real assets, right? Which is good for all the real estate investors out there, right?
Oh, yeah.
And then the problem is they always create bubbles. The government always creates bubbles. And
what happens to bubbles?
They burst. Oh. They bust. And so what happens, then we're sitting here with people that are over-leveraged, which I had a handful of clients. Not everybody was like this, but I had a handful of clients that were younger, more aggressive, and they would go and buy all this real estate and have 8, 9, 12 properties leveraged, mortgaged, right, basically, and renting them all out and doing the whole landlord dream, and then all of a sudden everything fall apart and they couldn't rent anything because people didn't have jobs.
Yeah.
And so versus someone that actually owns the properties fully outright, well, it's a little bit of an expense to maintain property, but if you got a few of them rented, it may help cover the other costs. So I don't know. Inflation's real. Inflation is really, there's obviously things you can do. Maybe you got to delay retirement, delay Social Security, get your money working for you. I mean, honestly, is real estate a bad idea? No, it's not. If you do want to diversify your portfolio, we're talking to clients about real estate, for the long term, long hold. Just like a client sat there and told me about the stock that she had from, let's see, would that be almost 40 years ago? And it's gone up. I mean, it's crazy, like 500% over that time period.
Get it on the ground floor. That's,
yeah, but it's 40 years. Like most people don't hold a stock for 4 days.
Right.
You're 40 days or 4 years. So, anything like that, a good, solid financial investment, whether it's a good, solid billion-dollar company or real estate, you are going to make money over the long run. You just have to be a long-term investor, and you can't be patient. This isn't Bitcoin trying to make money overnight, which we'll talk about later, by the way. Bitcoin has made so many people wealthy. It's also made so many people broke because they put a lot of money and leverage to get into it at the wrong time. So, but no, those are obviously the inflation numbers are hurting people. The steps that people need to take to retire, obviously, you got to think at a 7 to 10% inflation number. That's realistic. And honestly, when I put 7% in, our software that calculates for what they're going to need in income, there's a lot of folks today that have a good amount of money, $1 million in an IRA or pre-tax 401k, that it doesn't say they're going to be successful because they're going to have to pay tax and keep up with 7-8% increasing cost, right? And if you got a 7.2% inflation rate and you're living on $7,000 a month, okay, well, you're going to need $14,000 in 10 years.
Wow.
$14,000 a month after taxes. So what does that mean? You're going to have to live on before taxes. I mean, it depends on your tax bracket and all that kind of junk, but let's just say, okay, $17,000, $18,000 a month.
Good grief.
That's a lot of money in retirement, because the average retiree that we have is like $5,000-6,000 a month, and they're doing pretty good. They're comfortable. Not now. Now they're calling us, Brian, I need a little more money. I don't know why, because I didn't take anything out last year. Might be the 15% inflation.
Yeah.